Hello and welcome to this panel on CNBC Africa, focused on inclusivity and advocacy in a fast-changing business environment. My name is Ridhima Shukla, and I'm joined by a great set of panelists today, starting with none other than Governor of National Bank of Rwanda, Soraya Hakuzia-Rimye, the CEO of AFR, Jean Bosco Iyachu, Wendy Teleki, head of WIFI Secretariat World Bank, as well as the CEO of Financial Alliance Women. We will be exploring how leading organizations are breaking down barriers, leveraging innovation, and charting the course for making sure that women are included in the entrepreneurial race and economic growth of Africa. Thank you so much for joining us, all of you. I'd like to open with you, Ms. Soraya, about how do you see inclusivity the National Bank of Rwanda has taken through policy all these years to achieve the status of women in the business world?
We've done a number of initiatives, taking the last 15 years, first measuring what financial inclusion looked like in Rwanda. And Access to Finance Rwanda actually has been a partner in that journey with the first FinScope survey that was published in 2008 and showed that only 21% of Rwandans had access to formal financial services. And from that, the government decided that financial inclusion had to be at the heart of what policymaking in terms of financial and economic growth was, by setting up and promoting savings and credit cooperatives in every single sector in our country. So making really the access to finance going to rural areas and making sure that our rural population had access to a financial institution within 5 kilometers of their home. The second was allowing telecom companies to offer payment services, so mobile money, like in many countries in Africa. And now when we see the last FinScope survey of 2024, 92% of Rwandans now have access to either a bank account, microfinance account, or mobile money wallet. So our role as central bank has been to facilitate that adoption, to put conducive regulatory environment for payment system providers, but banks and microfinance as a whole. But our role also is making sure that the system is stable. That's where you can ensure that there's sustainable development of the financial sector. Then we realized that I would say there were underserved groups, women, youth, and there had to be initiatives towards women, towards micro and small, medium enterprises. Using gender desegregated data has been a game changer, because now we can go to the banks or microfinance and show them the gender gap that we still have in access to finance. So I think that has been our major role, measuring, advocating for initiatives, but also conducting our own gender inclusive finance policy initiative.
It has been an incredible journey as far as inclusion especially is concerned in Rwanda. And one more, just today, the launch of We Code. Please tell us a little bit about that, Wendy. What does it stand for? What does it establish for Rwanda?
Sure, thank you. And it's a great pleasure to be here today in Kigali to see the launch of the We Finance Code in person, and congratulate the central bank and the other signatories of the We Finance Code here. WIFI is an organization that's housed at the World Bank, but in Africa we work with not only the World Bank, but also the International Finance Corporation, the African Development Bank, the Islamic Development Bank, and EBRD, to develop programs to support women entrepreneurs, be it in finance or access to markets and other areas. And the We Finance Code was launched about 18 months ago as a systems change effort for countries to adopt that will help them close financing gaps by creating the enabling environment and commitments on the part of the financial institutions to actually work towards change. So every country that adopts the code, it's generally the central bank, the Bankers Association, other ministries, and then financial institutions sign on to the code as a voluntary pledge. And they commit to doing three things. First, to have a senior person in their management team who's going to be accountable for really helping that financial institution or that organization do more to support women entrepreneurs. The second thing they commit to, which was also discussed, was collecting sex disaggregated data so that the financial institutions and the regulators can really understand what's happening in terms of finance for women. How much funding is going out the door? How many women are getting funding? Are they strengthening their deposit base? What do the non-performing loans look like? They have to collect that data and use that data to make decisions on how to better finance women entrepreneurs. And the third commitment that institutions make when they sign on to the code is to take actions. And that might be new financing lines, new products, new services, training programs for women entrepreneurs, and also work together to address policy constraints or other system-wide constraints for women entrepreneurs. So we now have almost 30 countries that have launched the code around the world. We're excited for Rwanda to be joining that family today. We have about 10 that are launching in Africa. And probably another 5 or 6 more in the room today that we hope will launch. So it's really becoming not only a global movement, but a Pan-African movement that we're excited to be a part of.
Excellent, and I congratulate all 4 of you on that, actually. Taking that, what you just said about how these systems can be well lubricated to also support those who are outside of it, to bring you, Yaku, on that as AFR. How do you see the We Code, the challenges that it might face, or some of the things that could be still made better when it comes to private and public interaction?
Yes, thank you very much. So Access to Finance Rwanda, we are an ecosystem builder and convener, as you've seen in collaboration with the central bank. We've brought all these key stakeholders together really to align and form a coalition around the Women Entrepreneurship or Entrepreneurs Finance Code. And we are also a signatory, as really a signal that we value inclusivity. And as we see the numbers from the Finscope survey, clearly women entrepreneurs are not being fully served because of so many constraints that they still face in the society. And what we see is that really we need to create that awareness across board so that they know really women have specific needs and need to be understood and well understood by all stakeholders. So clearly, this is not a decision or an action that is required from the public sector alone, but really private sector is very important, but also as development partners to come in and support the private sector to really achieve and close the gap. And what we are seeing is that really tracking data is very important, but really also making sure that where these financial institutions feel there's risk, we come in really to the risk. And we may not only look at the side of the supply side, where the financial service providers, as they committed today, but really where we have challenges with the women entrepreneurs, understanding, having the right practices within their businesses, having the right capabilities. All of that also requires that us as development partners, we come in and really work on investment readiness for these women entrepreneurs so that when they go to the financiers, they're seen as credit-worthy and they can be supported. So, and then certainly working with the regulator to see which policy initiatives or regulatory initiatives needs to be in place. As we track data, we see the gaps, and how do we support and create that enabling environment. So I see really a combination of development partners, central bank and policymakers, regulators, but also private sector coming to ensure that we close this gap as soon as possible.
Yes, a very 360 collaborative approach, very data-driven. I would like to come to Enes now. And as you were just telling me earlier about Women Alliance holding this kind of summit previously in London, and then before that in another country in Latin America, I believe. Now you're here in Africa, in Rwanda. How do you see what he just spoke about, the riskiness of the African market?
An interesting anomaly that women, in fact, the data shows from our network. So we have 100 members around the world. Some of them are the biggest banks in their own markets, and many of them are also the largest lender to small businesses in their markets. The data that they show us shows that women repay their loans at greater rates than men in every loan category, not just as businesswomen, not business loans, but also consumer loans, all sorts of loans, right? That's global. So they're paying back loans at greater rates. The microfinance sector for many years have shown that as well. But the fact is they're still penalized when it comes to the premiums they're paying, actually, because they're perceived to be risky. A lot of the reason, though, for that is a perception issue, which is obviously false, but also that they don't have the collateral that a lot of the conventional, traditional, let's say, SME finance requires. So if you look at East Africa in particular, there's a requirement many banks ask, which is land title, and women don't have land title. So there are many workarounds, okay? And so we have been working on this as a global community for many decades, at least 3 decades. So introducing a cash flow-based lending approach into a bank where you're going into the business as a credit officer and you're looking at the shelves and you're seeing what kind of products they have, the dust on them, that you're basically testing to see, you're creating a cash flow and an income statement for that business. And then you're basically saying, look, if I integrate that with the household spending, how much money can this business generate every month? Can it pay back a loan? And also, of course, principally, cover all the household expenses for the house, because these businesses are integrated with their homes. That methodology was developed about 30 years ago and is now being rolled out in several African countries. But it is, by the likes of Kenya Commercial Bank, for instance, that have 500,000 women borrowers, right, borrowing through that methodology. It needs more banks to take that on. That's what we need. You need to as some of our speakers said earlier, to really cater to the women's market, you have to go to where they are. You can't sit in your marble branch and expect them to come in the door. You have to go to the market. You cannot waste their time. They don't have the time. So you have to have the methodologies. Then you integrate digital so that you reduce the transaction costs and so on and so forth. And you get non-traditional forms of collateral that they can then, and they basically, you never need the collateral. It's very rare that a woman would default, but we keep asking them for too much. So it's basically a supply side constraint. And to convince the CEOs to do this, they need to see the business case. And the business case is very compelling. Women pay back the loans, as I mentioned. They also are, they're the chief purchasing officer in their household. So if you basically have a woman as a customer, you can get all sorts of savings, insurance, et cetera, creating that business case. It's very compelling. And we need more banks to become interested in doing that and to understand that this is a fabulous market. They're very loyal. Once you serve them, they will tell many other women that they're happy. And if they're not happy, they'll tell even more women. So the word of mouth thing is hugely important, bringing them in.
Coming back to you, Soraya, what we just discussed about societal barriers, the amount of data that is being collected and how data is being used to accurately drive policy. What role is fintech playing at the moment to break those barriers that are also more societal and at the end of the day also play into how credit is given out?
I really have been holding the WeFinance code that I signed this morning. I will read it to you. The first sentence of the code is we envision a world where women create, build, and scale businesses on an equal footing with their male peers to unlock more jobs, innovation, and growth. So going back to the fintech is how do they accelerate that movement? So there's data because you need to measure to be able to address the challenges and even, you can talk about the gender gap, but if you don't measure it, some people actually will question whether there's any disparity between women and men entrepreneurs or businesses accessing loans. So at the Central Bank of Rwanda, we use technology first by building an electronic data warehouse, which is a supervisory technological tool that allows banks to automatically not only submit their financial reports so that we make sure that they are complying with their prudential requirements, but we made sure that we also use it for financial inclusion purposes. So mandating banks to also send gender desegregated data. And that's the role of where the regulator can not only enable access, collection and access and analysis of data, but also using our regulatory powers to mandate certain reporting requirements. Second was the fintechs that are coming in. What do they really bring or add value to the existing, let's say, banks and microfinance? And one of the fintechs that we welcomed in our regulatory sandbox was looking at ways to connect informal saving groups, and we know that 80% of members of these saving groups are women, to the formal financial services. So using the data that they collect from those saving groups, aggregating them and allowing them to have an account with a bank and be able to save, but also get access to credit, but using the aggregation tools of the fintech. The third thing we've looked at is Rwanda is primarily still dependent on agriculture. 70% of our population is employed in agriculture, hence many women in agriculture as well. We know that lending to the agricultural sector is actually still below 5% of all total loans that go to different sectors in the economy. And one of the issues for really measuring the risk of any agricultural projects is having accurate data on the production, the predictability of it. So we've been looking globally, and one of the actually products that we think will work in Rwanda is digital agricultural loans that India has rolled out, using all the data that they collect from farmers, being their land, whether they're part of a cooperative, what has been the production, and being able to give them uncollateralized loans up to a certain amount, which I think if you remove the collateral constraint, actually that makes women access credit more easily. And we're working with Access to Finance Rwanda as well to see how to roll out that platform that captures all the data that a bank would need to be able to extend loan to the farmers. And you can extend it to different services. So using alternative credit data to analyze the risk profile, not only of women, but underserved groups more, I think, specifically. And then start, dispersing loans to those underserved groups, have confidence in that data, and not always asking them for collateral that most of them don't have.
I want to take that just a little forward, because the numbers, the data that Soraya here is sharing is Rwanda specific. And of course, the WE code has been rolled out in other parts of the world. Looking at that data that is available and what has been done previously under WE code in other parts of the world, what lessons are you going to apply here so that those are things that not to repeat, or things that have been extremely effective and must be repeated?
Yeah, so one point is that the data does not exist. We know that OECD, which collects data through its SME scoreboard, in the past has only had 2 countries that have been able to collect and report that data on women-led businesses and how much financing is going to them. So we have now started making progress in a number of countries that have launched over the last 12 months to get that data, and being able to not only collect the data, but visualize the data using data dashboards is very important, because what we want is not to collect data for data's sake. What we want is to use the data as a decision-making tool so that the financial institutions can use that to provide insights into what products and services might be required. And so policy makers can understand what they need to do as well. And we heard a lot of examples today of where the data is showing that certain policies need to be made. Maybe a policy has been tried and hasn't worked, and you can see that through the data. So how do you tweak the policies? Do you need to move from an incentive to a mandate, for example, with certain things? Do you need to work on focusing on underserved women in certain regions of a country or in certain sectors? Like, do you need to work with microfinance institutions, or are banks more important? So the data really informs a lot of what we're trying to do in terms of actions. And so embedding it not just as a data collection exercise, but as a decision-making tool is very important. And just, you mentioned fintechs. What we know about fintechs is about 2/3 of fintechs actually collect disaggregated data, but only 1/3 ever look at that data to make decisions on how to deploy their products.
Is it because women are a smaller market or a less lucrative market? Why is that?
It's because they've never seen the business case or really thought about how that might affect their products and services. With banking, it's, as Inez said, it's taken 30 years for banks to wake up to the fact that, this is a segment that's very valuable if you look at it in the right way. And fintechs are still coming to that realization now and helping them by bringing them into the code, by bringing fintech associations in and bringing other associations into the code in a country is a really important way to get all those different types of financial institutions to really change their mindset about how to think about women as a market for them.
One of the things that I hear here is also the entrepreneurs, the women themselves, or the underserved community, they themselves have a role to play. So somebody who works in the development space, what does the interaction tell you with these candidates about what their literacy level is in understanding what they can extract out of these systems that are being rolled out?
Very interesting question indeed, because when you look at the micro enterprises that are led and owned by women, certainly you must start with really financial literacy so that they understand exactly how to, and business literacy, but also we are adding even digital literacy. So financial, business, and digital, because these are very important kind of skills that are needed to run an enterprise and make sure that you really get better returns. Now, that said, actually there are different financial institutions that have gone out of their way to innovate and see how they can support them and provide those non-financial services to these women that are owning and running businesses. And one thing that really caught my attention was, some MFIs that are providing even an ERP or a platform to these businesses so that they're able to track even data at the sales and so on and see how they're being profitable or not, and be able to produce financial statements at the end. But once again, because Inez mentioned it, when you start tracking the data at the location there, then as a lender, you are able, in fact, to provide cash flow-based lending because you no longer need collateral because you can see, you have visibility of the transactions and so on. But in all these, I think it's that sensitization so that also women play their part so that actually we don't always blame the supply side that, the financial institutions are not doing enough. And something which is very important, these women, they don't need really transactional banking. They need relationship banking. So they want to be heard. They want to have a partnership, not like men. So you would give, you open an account, you get a loan, whether needed or not, men will take it. But women, they think twice before taking this loan. So because they want a partnership, they want a partner for growth, and they want someone who can listen and walk the journey with them. So it's very important that the mindset is changed from the outset.
How is that, the We Code, designed to achieve the outcome it wants in sectors of growth in Rwanda where women show great promise?
The essence of the code, why it's so kind of, first of all, it's easy to understand, right? So everybody likes the idea. But then what was mentioned earlier on in the summit today, it's the coalition piece. So you're bringing in the regulator with the regulators, because there'll be more than one kind of financial services provider, the signatories, you're bringing in the ecosystem orchestrators, you're bringing in the fintechs, etc. People are sitting around the table informed by data about what's working and what isn't working. And there's no doubt that some of these things that we're trying to do are the hardest things you can try and do, right? Go into the rural areas and really support the low-income farmer, the woman who's working every day and also is facing climate change and all of this. These are hard, some of these are hard problems. At the same time, we're ingenious as a species and we can figure it out. So I think it's putting people around the table, injecting enough firepower within that. So it's really about getting the CEOs. Once you convince them, and they'll be convinced if there's a business case, they'll also be egged on to develop the business case, because in some segments it's not quite there yet, right? The business models aren't quite well designed yet. But nevertheless, informed discussions on a regular basis at the national level. And like my country, which is Ireland, the government played a massive role. It's not up to the private sector to completely develop the entrepreneurial ecosystem. There is a need for cogent industrial policy that can really bring in that foreign direct investment, et cetera. So that's the kind of big vision here. It's not just, getting that loan to the low-income woman in the rural village. That's very important, but it's about how do you develop the economy through injecting capital at the levels that it's needed to be.
Absolutely. That's why we have Soraya here on the panel. And that's why the title of our panel is about developing an ecosystem as a whole that is conducive to the changes that all four of you are trying to make. We are very close to the end of the panel, so before I let you all go, very short closing remarks. You can consider it a message to the women entrepreneurs who are going to watch you. Starting with Soraya, please.
Numbers show that globally, if we were to close the gender gap in financing women entrepreneurs, that would add up to $6 trillion of economic value to global GDP. And I bring this down to Rwanda. What would that mean if we were to add $700 million to our GDP? And those $700 million would be coming from women entrepreneurs. So there's a business case there. So let's make it happen.
Excellent. Thank you, Soraya. I'm sure women are listening. Wendy?
I think what the code is really trying to do is to make every financial institution really think about how they can deploy their capital more effectively for women. And as we think about aid flows and capital flows, we really want to mobilize local capital and local capital markets to invest in women's economic empowerment. So the We Finance Code is really a tool to do that, to bring everyone together. Of course, we're working with our multilateral development banks to bring their resources together. Other philanthropies are involved. And really think about how do we crowd in the local capital to go towards this very, very high return sector, which is women entrepreneurs.
Direct message to the lenders. Go on then, Jaco.
Yes, thank you very much. I mean, my message first to the women entrepreneurs, I think the time is now. And I know some of them feel, they are too small with small businesses, but really time is now because that small business will never change, their lives, even the households kind of livelihood. So it's very important that they come out. They reach out to financial service providers, to development partners that are supporting like us, to understand so that actually we know their core needs and then support. Now to the financial institutions, I think they will never be sustainable as businesses if they don't serve more than 50% of the population who are women.
Yes, so you're talking about sharing the responsibility. Women need to also come up and share the responsibility with financial institutions. Also, they should look at their own profits. Enes?
Women, I would say total respect. We know you're putting the uniforms on the kids to send them to school. We know you're taking care of the family health. We know you are building your local economic community. And, we would encourage, as Iachi said, to think about, you do need leverage, you do need debt to grow your business often. It's not enough to grow your business through your own savings. You need other inputs. So not to be afraid of debt. The market is in Africa. What we need to get is the banks to move down market and finance the SMEs.
I thank you all for sharing that, for encouraging the women and giving a fairer chance to the fairer gender. Thank you so much for watching CNBC Africa on inclusivity and advocacy in a changing business environment.